Welcome to the Nebraska Soybean Board Weekly Market Roundup, being brought to you by Nebraska Soybean farmers and their checkoff. I'm Susan Littlefield. We are on location at NCC The Classic, a great cattle show that's been going on all week. Will continue through Sunday. So, of course, we'll talk a little bit about what's been happening in the protein side of the markets, but more interesting, if you saw the corn numbers, don't rub your eyes. That is corn below $4 on the nearbys. Of course, we had some expirations and other things that are factoring into what we saw in the markets to wrap up a Friday. We'll be back to talk more about what those factors are after this.
Meet the champions of innovation in the heart of Nebraska. They're not just farmers, and they nurture more than just crops, pushing boundaries and turning challenges into opportunities. They trade knowledge and know-how, and their dedication doesn't end at harvest. It's in your every bite and every drive. The future of food, fuel, and fiber, and the future of Nebraska starts right here.
And welcome back once again. Of course, we're going to talk with the guys from Tredas today, and Tyson and Alex both joining me. And gentlemen, it's been an interesting week for market trade. And I wanted to start out, just kind of give me your overall thoughts. Rewind to what we saw in the trade earlier in the week to how we finished out of Friday. And Alex, I'm going to kind of throw it to you first, and kind of give me your takeaway of this market this week.
Yeah, it's certainly been a tough week in terms of the grains. I mean, if you look at February in general, it's been kind of a tough go. You know, one of the more bearish months in recent history, just with March corn, only having a 3-day higher close. December futures had their worst February since 2013. So tough week. I mean, we kind of been in a downward trending channel just on March corn here nearby, but broke that here the last couple of days. So not a lot of great things with March expiration coming in, basis contracts getting priced, a lot of things pressuring the markets just outside of the fundamental cloud we got kind of hanging over us.
All right, Tyson, for you, what was your takeaway from this week's trade?
Obviously from a producer standpoint, hasn't looked great. We've been sliding here in recent history. The big thing out there is the managed monies are extremely short the market right now. They're not record short, but they're knocking on the door of being that way. So that continues to put a lid on this market. Any rally or recovery that we see seems to be short-lived. We just can't seem to get past these 9 and 20-day moving averages that are our trailing moving averages, unfortunately. But, things don't go down forever and they don't go up forever either. So there's going to be some of this that happens in the markets. Unfortunately, right now, it seems to be on the lower side of things. So hopefully we can get a turnaround, get past this first notice day. I think a lot of this pressure, like Alex was mentioning, comes from the basis contract deal. We got a lot of people that are either unsold grain that got to get out to the next 1 or 2 months. And I think a lot of the market knows that and realizes that. So that naturally will put some pressure on the market as we move forward.
So did either of you expect the March contract to go below $4 on a Friday?
Man, you look at it, kind of the longer term fundamentals, you would have said, we'd hold that support, but, we were nearing it kind of most of the day. And then, we made new contract lows today again at 398.5. So, we finished a penny and quarter off the low, but man, I'd hate to see that 399 finish on the screen like that. It'd be much more comfortable rolling into the next week with still start with a 4, but
I'm looking forward to talking about the May futures month when that's still above 4.
All right, well, let's talk about May futures. Since you brought it up, what are your thoughts on how that one's moving? Let's look at something a little more positive.
On the May side, it's been obviously on a consistent slide as well. From a producer standpoint, obviously there is carry out there in the market from the March to May. There's currently a 13.5 cent or 13 cent carry, let's call it, and then another 12 cents out to the July. So there are carry opportunities out there. And I know it doesn't feel good wanting to do something or pulling the trigger here as the markets continue to slide, but there are still opportunities within the market. A lot of people talk about doing value-added things, whether it's selling options or doing something to try to help bring value to these contracts, depending on what you're doing. In our experience, trying to put some sort of floor on it, breaking the thing down and trying to make incremental decisions to get to your endpoint, would be advisable on our side of things. But hopefully we get some sort of rally or recovery. There's no guarantee of that, obviously. But yeah, May corn is at 413 3/4 at the close.
What a crazy week we've had. I mean, I don't think anybody could have foreseen what we were going to see. But I want to flip gears on this for just a second and look at it from a livestock perspective. Lower corn prices means a decrease in their costs when it comes to purchasing grain.
Yeah, feeders had a pretty good week here. If you revert, a week or so ago, it looks like, just looking at the May feeder contract, it looked like we were reaching to a point of kind of overbought, and we sold off for 2 or 3 days, but then opposite, corn can't break its 20-day moving average. Well, feeders found their support at that 20-day moving average of that 252, and then we go and trade quite a bit higher. But even yesterday, we trade to a new high, and knock out the previous day's low. So maybe looking at a kind of a reversal there, but we bounced back again today. We're up $2.50. So on the livestock side of things, it's been kind of nothing but good news here recently.
Any thoughts, Tyson, that you might have from somebody who's looking? Is this the time that we should be locking in some of these feed prices?
As far as your feed, getting your feed allocation, yes, that would make a lot of sense. Things are at the lower end of the range, in a point of weakness, we'd call it. So, trying to do buying activities would make a lot of sense in this type of time frame. Relying on certain indicators, whatever your indicators are, to get those decisions made is, something you want to fall back on and be consistent in the process. Is that knowing where your allocations are, and don't go 100% on any one day because it feels good or it feels bad, but trying to be consistent in your thought process and understanding that, hey, this thing might continue to slide, but if it does, what am I going to do? And if this thing recovers, what am I going to do in option B, essentially? So as far as the feeder cattle prices go, like Alex was talking, we were rewind back to the end of the year last year, we slid probably 30%, which is a huge, massive number. And we recovered probably 25% of that here over the past 2 months, which has been an incredible turnaround as far as the feeder cattle side of it goes. So, keep marching them things higher. Fundamentally, it looks friendly. Technically, it looks like, we're pushing up towards overbought conditions. So trying to understand and protect and know what you want to be accomplishing with your own operation, essentially.
So when you look at the big picture on these grains, how tight can these fundamentals get?
The fundamentals in terms of the grains they're not great. Having a big carry out just kind of looming over our head. Tyson said earlier, things don't go up forever. They don't go down forever. And we get to some of these lower price commodities, we'll find some new demand and something new will change for us to go change pace. And I think that's more or less, kind of looking at the funds. It's like they need some new piece of information to kind of change their position. So right now the fundamentals don't look great. If we roll into the year and have a decent spring and we grow a decent crop, but something happens, it seems like we'll get an opportunity or marketing opportunity or some crop scare event between now and June. There's a lot of time, so it's more or less trying to stay patient and stay in position for an opportunity to come your way, but then being disciplined to go hit that, and kind of knowing, hey, I'm going to make these decisions if I get these opportunities, and stick it to that and hold your feet to the fire, I guess.
Geopolitical, how much is that going to weigh in? I mean, this whole global movement, I know, Tyson, you're kind of shaking your head, but
do you know the answer there, Susan? So we're all looking for the answer there, I think. So any day, check to see what the most recent headline is.
Yeah, and you bring up a really good point, because how much of our market initial knee-jerk trading is because of what those headlines have to say.
A lot of the political tension, obviously wartime type environments will create a lot of market volatility, whether it be corn, beans, wheat, across the board. But more so the unknown, or the fear of the unknown, will create volatility. Fortunately, right now it's all to the downside as far as the grains go. So we need some sort of catalyst or something to revert these things and get them back in a different direction, or at least get some sort of ebbs and flow to this market. Like I said, right now we're going into election year. Obviously, everyone has their opinion of what that may or may not look like. So trying to understand and make in understanding what that may mean. A lot of people have a lot of, like I said, opinions about that, but I don't know if there's any actual credibility to some of those
opinions and what happens in politics. I find that so hard to believe.
Exactly, Susan.
Is there an abundance of grain out there, though? Do we see more grain being held that maybe what we know about out in the countryside?
Go ahead, Alex.
Yeah, I think there's, if you look across the Western Corn Belt, I think in general, if you, again, not looking at everyone's opinion, but if you believe the USDA number that they printed, I think the Western Corn Belt had quite a bit bigger crop than we did a year ago. So, I think we're seeing a lot of that more sitting on farm rather than in town. I mean, just talking to commercial buyers, and I don't think that they've got a comfortable amount purchased. I mean, yeah, it's trickling in just as we near March 1st and different cash needs are coming up. But I think a lot of it sits on the farm. If we believe the USDA number, and whether I believe it or not, doesn't matter. That's the number the market prints. So if that is true, I think we've got a lot of corn sitting on the farm yet.
So what's it going to take to sell it? Obviously higher prices, but
Yeah.
what's going to be the push?
Yeah, I mean, cash needs come March 1st, but also logistically, at some point we can't move all, a couple billion bushels at the snap of a hat. I think it's going to take, basis is generally hung in there. And again, if we believe the USDA in that production number, that wouldn't maybe lead to trading either side of zero basis or 15 over for ethanol plants. So I think basis is going to have to do the work, and it's been hanging in there. We've had a future slide, but basis seems unchanged to, maybe a nickel weaker. But, I think if that improves, I think that helps, cash prices and get the flow going.
So as we wrap this up, I want to ask each of you, and Tyson, I'll start out with you. What's the thing you're going to be looking for in these markets starting next week when we see that kind of wrapping up the month of February and hitting March?
It would be, I guess it's 40 days or so from now, there'll be the prospective planning intentions report. So that'll be one of the next things that guys want to get prepared for or talking about. Obviously, they're expecting us to plant a huge crop. If they're pegging a tread line type of yield, that's going to result in a big carry out. So any supply hiccup or anything that could get us out of that situation would be a reason for a price driver to the upside. If we continue to get similar type of news and nothing changes in the forefront here the next 1 to 2 weeks, I don't see a lot of things changing in the current landscape. But like I said, last April or May, as far as the soybean side were to go, we would be roughly the same type of values, and it felt like there was nothing in the market that could make it go up. And 2 or 3 weeks later, we had a drought scare, supply scare, and beans were up $3 to $4 over probably a 2-month time frame. So things can change. Things can, like I said before, things don't always go down. They don't always go up forever. So trying to understand where you're going to be at, and hopefully some of this market weakness wears itself out on the grain side of things and get some sort of recovery going in the next couple of weeks and starting our planting off right.
All right, Alex, for you?
Yeah, I think more just trying to, stay in position to be in position. It's like you said, it's kind of been a tough go here the last 100 days, but at some point we're going to have to make some decisions new crop wise. So more or less just trying to stay flexible, and utilizing things at your, just to kind of break up your decisions. Say, hey, I don't love the corn price today, but I want to make sure I don't, it doesn't wither away another 20 or 40 cents on me. So really, I guess, having a plan, looking into the spring, knowing what you're doing 30, 60, 90 days from now, independent of price direction, I think is going to be key. It's going to be huge, obviously, with break evens all over the board and futures price not being our friend here recently. So.
All right, gentlemen, thank you so much for joining us. Of course, joining us, Alex Gade and Tyson Broekemeier with Tredas. Gentlemen, have a great weekend, and we'll look forward to our next conversation down the road.
Thanks for having us on.
Thanks.
No problem. Quick reminder, commodity futures and options do involve a substantial risk of loss, not suitable to all investors. And that's this week's Nebraska Soybean Board Weekly Market Roundup.